Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. It is probably the last active trading day for the markets before the Western traders go on a Christmas holiday, and there's a lot to look forward to. Starting with the monetary policy events, there's the rate decision by the US, Japan, and England this week. On the data front, there's a host of data from China, retail sales, industrial production, property prices, some of which are already out, and then there are the PMIs and the CPIs from the EU and the UK. From the US, there's the revised GDP and the important PCE print on Friday. All this while, there's political turmoil going. South Korean president has been impeached. That's caused a great deal of turmoil in their stock market and currency market, which more or less is stable right now. Good morning, JK. It's an action-packed week ahead of the holidays. What's your focus? Is something our listeners would want to know.
Hey, good morning, Swaraj. Yeah, I think this is going to be the last busy week for the year 2025. And, but it cannot get busier than this because we have G3 monetary policy meeting, starting with Fed, followed by Japan and then UK. So then a host of data on inflation, GDP number, which is advanced, the third estimate data is being advanced. Usually it comes in the last week. And then we have the Chinese numbers also, which are already flown in today. So, but still, I don't see markets ready to move in a big way, at least for now. Because the market has an overwhelming thought about the new US government policies that will become clearer next month. So any reaction to these numbers, decisions will be momentary or knee-jerk, and it won't be creating a new trendy moment, definitely, barring any exceptional currencies or markets. Now, on to the monetary policy meeting. Fed is expected to cut rate, but it's expected to be a hawkish cut. In all probability, by many market participants' views, next for next several meetings, or at least 2 to 3 meetings, there may not be another cut. And end of 2025 expectation is that rates can go down by another 0.5% at the best. So this is a way different outlook compared to what it was in the beginning of the year, where the rates are expected to go down to 3%. So even the dot plot this month is unlikely to get too much of a importance or too much of significance from the market point of view, because everyone knows that picture can change on inflation later in the coming months, depending on how the tariff and other plans go ahead. Then Bank of Japan, we have opened in the last, some updates back that, Bank of Japan will be hiking rate, conditions are in place. But the recent, indications are that they are probably holding back the hike in this month and probably will do that in January. That is because despite many data points improving, which can justify a rate hike, they are looking at the challenges that can arise from the tariffs and the other policies of the new government, how it can impact the economy and the markets. Therefore, looks like they will hold back any rate move and will hold the rates steady at the current level. It's clearly reflected in the Japanese yen, which has weakened beyond what I expected. Like I was expecting 152 to cap, but then it is well above 153 as well right now. But it is also, the dollar yen is also held by the M&A flow, which has been in cash, and because you can clearly see that yen weakness is not actually percolating into stock market gains. So the Japanese, rather the Nikkei, is not really making any gains. Finally, on to UK, expectation is that they will hold the rate, but then much of the data recently in the last 2 months has been on the weaker side. GDP number on Friday was again minus 0.1%. following similar fall in the previous month. Now, market is already talking about whether they will have a technical recession. Industrial production was substantially lower. So I wouldn't be surprised if BOE goes against the market expectation and cuts rate by 0.25% to boost growth, because after all, their inflation has not really gone up after falling to 2%. So that is one surprise that may await the market. And UK pound moves are also kind of reflecting these possibilities. On Friday, we had the German trade data again indicating the economy is struggling now, not only on the domestic front, also on the external front, because the trade numbers were substantially lower. Exports were much lower than the imports. So the largest economy in the Eurozone further struggling. So once again, people are looking at negative GDP from Germany. As I said, UK data was weak. Japanese data was strong, but again, as I said, there was no indication that they are going to react to those numbers. And today we had the Chinese numbers on industrial production, retail sales, and house price, as well as unemployment. It clearly shows the retail sales have been far lower than what was expected. 3% versus 4.6%. Industrial production, of course, was 5.4 versus 5.3 expected. So it kind of shows a mixed performance of the economy, despite all the stimulus that the government has been providing and is promising. So there is no sign that the economy is sustainably recovering. That is something that coming even as it faces big headwind in the form of higher tariffs from the US government in the coming month as well. Of course, one thing that we can see is that the euro is on the currency. Euro is supported well below, well under 1.05. This is more, I would put down to the year-end demand, which is happening right from now, because later on month gets a very thin market. Also, one of the things that is emerging is that ECB is no longer reinvesting the matured QE amounts. So that means the liquidity is somewhat shrinking in the Eurozone, which may also be kind of supporting the euro. In fact, along with the US yields recently, even the German yields have slightly gone up. But this may be temporary, because eventually, based on growth and also inflation, if it is not further rising, ECB is going to be on a rate cut path, and Fed will be on hold. This will clearly put the euro on the downside, and the current recovery rally should be definitely used for hedging euro receivables by the market. Overall, dollar looks like consolidation. Some knee-jerk reactions to this week's events, but nothing directional. Gold is also settling down in a narrower range after big volatility that was seen last week. So all in all, expecting a quieter time. On the Indian rupee, there's some mild strength was seen in the rupee on Friday, based on some inflows from foreign investors and the equity market. Equity market made a stunning recovery on that day, falling more than 1%, and then eventually ending about 0.5% higher. And it was reportedly a good buying by the foreign investors. So seems like the 11% fall in the Indian market on the major stocks, index stocks, and then much larger fall in the other stocks have actually attracted some sort of a value buying by investors. That is giving support to the inflows as well. But the rupee is, while it has shown some mild strength on Friday, unlikely that major follow through will be there. And even in case we do see larger inflows due to monthly rebalancing, etc., I think any recovery should be restricted to 84.60 on not more than 84.60, because the central bank themselves should be very much interested to grab the dollars to replenish their reserves. All in all, looking for a quiet market, but intraday volatility can be high. Thank you.
Thank you, JK. And it is going to be an action-packed week. Monetary policy meetings. We have got the Fed, which is expected to cut, but it is expected to be a hawkish cut. Bank of Japan's recent update seems to favor a rate pause rather than a rate hike. Though data is justifying a hike, but the central bank is moving cautiously as there is a great deal of uncertainty in the year ahead. Bank of England is expected to hold rates, but since data is on the weaker side, there is a possibility that they might just surprise with a rate cut. When it comes to the Chinese numbers, they were weaker because the retail sales was also lower at 3% against 4 to 5% expected. So despite the stimulus measures, there seems to be no substantial improvement in the numbers. For rupee, we saw some strength on Friday due to some inflows in the equities, but any recovery may be limited as the central bank steps in to replenish its reserves. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.